to the weekly market recap with SC Securities. Let's have a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka state-owned enterprises are set for a major transformation as President Andrakumara Dissanayake announced the government readiness for structural changes in loss-making entities. Addressing the Sri Lanka Economic Summit 2025 in Colombo, the President revealed that a study is underway to explore the possibility of listing these enterprises on the Colombo Stock Exchange through a holdings company. The President emphasized that the government is moving away from the conventional approaches and is prepared to make significant reforms. He noted that the authorities are assessing whether merging certain enterprises and issuing shares in the stock market could be a viable solution. Additionally, the restructuring process includes a review of corporations and boards to determine their future direction. Highlighting the need for efficiency, the President pointed out that the several state-owned enterprises currently perform overlapping functions. He indicated that some may need to be closed, while others could be merged or have their operational scope adjusted. The identification process for these changes is already in progress. As Sri Lanka seeks to strengthen its economic framework, these reforms are expected to pave the way for a more sustainable and efficient state sector. The Central Bank of Sri Lanka has decided to maintain the overnight policy rate at 8%, following its first monetary policy review for 2025. The decision announced on Tuesday aims to support economic recovery while ensuring inflation remains under control. According to the central bank, this move is based on a careful assessment of domestic and global macroeconomic conditions with a medium-term goal of stabilizing inflation at 5%, while guiding the economy towards its full potential. Speaking at the post-monetary policy briefing, CBSL Governor Dr. Nandalal Veerasinghe highlighted that inflation had declined more sharply than expected, partly due to an additional electricity tariff reduction in January. However, he expects inflation to turn positive by the third quarter of 2025 and stabilize at the 5% target in the medium term. Economic growth appears to be picking up momentum, with GDP estimates from the Department of Census and Statistics indicating a 5.5% year-on-year expansion in the third quarter of 2024, following a 4.7% growth in the second quarter. Annual GDP growth for 2025 is projected at around 5%. Dr. Veerasinghe also noted that the economy is expected to normalize within the next 8 to 9 months as recovery efforts continue. The central bank observed that market interest rates are stabilizing, with the overnight policy rate now aligned with both short-term and long-term lending benchmarks. The easing of monetary policy in recent months has led to a decline in market lending and deposit interest rates, supporting economic activity and increasing private sector credit growth. Keells Holding plc has successfully completed the conversion of unlisted debentures into equity by HWIC Asia Fund, a subsidiary of Fairfax Financial Holdings Limited, the company's largest shareholder. The conversion process stems from an issuance in August 2022 when JKH issued 208.125 million rupees worth of unlisted debentures, carrying a convertible option with a total face value of 27.06 billion rupees. These debentures were priced at 130 rupees each, with shareholders granting approval for conversion into ordinary voting shares. HWIC had previously exercised part of this option in February last year, converting 110 million debentures. Now the fund has converted the remaining 98.125 million debentures amounting to 12.76 billion rupees. As a result, JKH has issued and listed 1 billion new ordinary voting shares adjusted for the company's recent rights issue and share subdivision. This move has led to a dilution of 6.13% based on the total outstanding shares as of 22nd January 2025. Following the latest conversion, HWIC now holds a 24.31% stake in JKH, up from 19.4% at the end of September 2024, further cementing its position as the largest shareholder. Sri Lanka and the United Kingdom strengthened their economic ties with the recent visit of UK's Minister for the Indo-Pacific, Catherine West. This marked the first ministerial visit since new governments took office in both countries, with discussions focusing on trade, inclusive economic growth, anti-corruption efforts, and human rights. During her visit, Minister West reinforced UK-Sri Lanka trade relations, aiming to boost business growth in both nations. A major highlight was the launch of new export procedure handbooks designed to help Sri Lankan businesses navigate the UK market under the Developing Countries Trading Scheme. This initiative reduced tariffs, removed conditions, and simplified trade regulations for 65 developing nations. The minister met key government officials to discuss economic collaboration and investment opportunities. Emphasizing the UK's commitment to Sri Lanka's development, she highlighted the importance of economic and social progress, stressing efforts to combat corruption, advance human rights, and address climate challenges. As Sri Lanka continues its economic recovery, this visit is expected to contribute towards stronger trade partnerships and expanded investment opportunities between the two nations. Sri Lanka's external current account has seen significant improvements supported by higher earnings from both tourism and workers' remittances. Speaking at the Central Bank of Sri Lanka's monetary policy briefing, Economic Research Director highlighted that these inflows have played a crucial role in strengthening the country's foreign exchange position. Workers' remittances say notable growth in 2024, reaching a record $6.58 billion, up from $6 billion in 2023. This increase was driven by factors such as higher migration, festive season inflows, and improved exchange rate policies. The tourism sector also made a strong recovery, particularly during peak seasons, generating an estimated $3.2 billion in earnings for the year. Improved global travel sentiment and Sri Lanka's appeal as a tourist destination contributed to this growth. In total, the combined earnings from remittances and tourism in 2024 amounted to approximately $9.6 billion, providing a vital boost to the country's external finances. However, despite these positive developments, the central bank cautioned that Sri Lanka's foreign exchange position remains fragile. While these inflows have strengthened reserves, the country will still face economic uncertainties, potential policy adjustments, and ongoing external debt obligations that could impact long-term stability. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 7.93%, down by 19 basis points. The 182-day T-bill rate stands at 8.09%, down by 16 basis points, and the 1-year T-bill rate stands at 8.47%, showing down by 16 basis points compared to the previous week. Thank you for watching, and we'll be back next week.